Nvidia, Microsoft, Anthropic announcing new partnerships. This is coming ahead of Nvidia's third quarter results. For more on the state of play on AI and Nvidia's highly anticipated earnings, let's welcome in Intelligent Alpha founder and CEO Doug Lipton. Doug, great to see you. Your timing is always impeccable because we got this big AI deal. I need the Doug Lipton take on this. Microsoft and Nvidia, all right, they're going to invest, Doug, up to $15 billion, that's with a B, in Anthropic. And you know, when you saw these headlines cross, Doug, we do hear a lot about these, what's now described as kind of circular AI deals. There's kind of money moving back and forth. We're going to commit to use each other's products and services. Some have looked at these kind of deals and say, hey, it's actually a yellow caution flag. But I'm curious, when you saw that headline, what did you think?
I thought more of the same, Josh. I mean, we've seen many of these deals. AI has really been all about deals for this full year. And so when you think about Anthropic, they've been actually the ones who've been sort of quiet. I mean, OpenAI has been out there, Sam Altman's been super aggressive with making these deals. And so I think Anthropic did need to make a play. They needed some of these partnerships that they announced today to really get some of that infrastructure capacity that they need to ultimately deliver their product. But when I think about this circular notion, I think it's a fair criticism from people concerned about an AI bubble. But I always come back to the logical conclusion, which is if these companies don't create a super valuable product for end customers that want to pay for it and make all this infrastructure worthwhile, then we're going to blame all kinds of things on the failure of that reality. I think they are creating that technology. And so time will tell, and that's just kind of the bottom line for these deals is we just need to see how it plays out over the next several years.
How do you see this Anthropic, OpenAI rivalry kind of evolving from here, Doug?
The thing that we've always been worried about with Anthropic is that they, I think, have had relatively less access to capital compared to OpenAI, and maybe even compared to xAI, and certainly compared to Google, who can self-fund. And so this deal to me shows that I think they're certainly aware of that. They're finding ways to sort of de-risk that capital access issue. Because at the end of the day, if you want to be a frontier model provider, if you want to play in this game, you need access to a ton of capital. And so I would expect to see more deals like this from Anthropic.
Let's switch gears here. Nvidia, face of the AI trade, earnings on deck. What are you watching for, Doug? What are the key metrics you're going to make a beeline for?
It's all about the guidance for next quarter, for Q4, their fiscal Q4.
You expecting good things there?
I think it'll be good. I think it'll be okay. And I think there's two things that I would put into that. One is Street is looking for about $62 billion in revenue for Q4. Typically, Nvidia guides up, call it kind of 2 to 3% on the Street. I think they probably do something like that, maybe even a little bit better. And I think that's probably a relief, certainly given what's going on in the AI trade right now. The second thing, though, is this $500 billion number that Jensen put out at GTC just a few weeks ago. He said they have $500 billion in demand between this year and next. And if you kind of do the math on that, there's like 10 percentage points in growth upside to where the Street's at for revenue next year. And so I think we start to see a little of that flow through on the guide, but then I think we also get some more commentary about what that'll look like for next year.
What's your take on the China business, by the way? Because they're not modeling any revenue from China. And I'm curious how you see that business developing from here. Or do you think, Doug, listen, it's just too hard to say because I don't know how US-China trade relations are going to go?
I think it's all upside from a stock perspective. I don't think there's anything in anybody's models for China at this point. Jensen has said they do zero business there. I mean, that was a recent comment from him as well. And so even though we got the unlock with the H20 restrictions from the US side, the Chinese side has been pretty stubborn. And so until we see maybe a deal between the US and China, I would suspect there's nothing there for Nvidia.
I want to get some other headlines on Nvidia that we're interested in. Peter Thiel's hedge fund unloaded its stake. SoftBank unloaded its stake. Is that a source of concern for investors in your opinion?
It's not, in my opinion.
How come, Doug?
No, I mean, two things. One is from a demand perspective. I go back to who's buying the end product, and we just talked about there's still tremendous upside to next year's numbers if Jensen, what he said about 500 billion is accurate, and that number doesn't even include any new orders. That's just existing orders. And so I think the demand is still there. We know that these hyperscalers, they can't build data centers fast enough. So that gives me comfort in Nvidia. The other thing too is you think about Peter Thiel, you think about SoftBank, you don't know what they're reallocating this capital into necessarily. For SoftBank, it doesn't feel like they're out on the AI trade. It seems like they're probably rotating one of their bigger positions and opening that capital up maybe to invest it in other places in AI. I think they're certainly still long AI. And Peter Thiel his macro fund, as I understand his global empire, right, is a relatively small part of what he does. I think at Founders Fund, where he spends much more time, I think they're still very much focused on the AI trade as well.
How, Doug, has the competitive landscape, how has that shifted, if at all, meaningfully for Jensen Huang over the past 12 months?
I don't think it's shifted much. I mean, the AMD deal that OpenAI announced a couple months ago is maybe the biggest thing that was kind of a wild card, but I don't think that really changed the competitive dynamics. They are still the go-to place for every hyperscaler. The only thing that is sort of emerging right now is Google's announcement today with Gemini 3.0. Let's talk about how they really optimize that model for their own silicon, TPUs, but they're really the only ones who have that level of custom silicon. They've been building TPUs at Google for more than a decade. And so that's one thing that, maybe that becomes a narrative for NVIDIA, but I think everybody else is so far behind Google from a custom silicon standpoint, they still need to rely on NVIDIA.
Final question, because your funds own NVIDIA, right? Am I correct on that?
We do own NVIDIA.
How would you characterize valuation here for this one?
I would say it's healthy, but still comfortable. If you look at the Mag 6 broadly, this is one thing, we look at this all the time for the bubble question. The free cash flow yield on the Mag 6 is about 2.5% or so. You compare that to the 10-year, yields 4%. These companies are going to be growing free cash, probably mid-teens for the foreseeable future. That's not a crazy valuation in any way. It's certainly healthy. It's not super cheap, but I don't think the Mag 6 is reflective of a bubble.
Doug, always great to see you, especially on set. Thank you, sir.
Thanks, Josh.